Let's analyze the stock market trading session for today, Tuesday, April 19, 2022. This is a daily chart of the S&P 500. For the record, I am long the S&P 500 via the UPRO ETF. I bought it today after hours. Why? Same setup that I mentioned in the previous video. I said two conditions. It would have to close above the 5-day moving average and above the 50-day moving average. And that happened, so I executed my plan. And then it was even better because it closed above the 10-day moving average. Bought it after hours. After hours, futures were down about 20 points, so I roughly bought around 44.50. My stop loss is below yesterday's low. Have a very loose stop loss due to the big volatility that we are seeing lately. Volatility or choppiness, whatever you want to call it. So I bought half position with intention of adding to my position either up here once it pushes above the 100-day moving average, or even close to the 5-day moving average. But I would have to see a bounce off that level in order for me to add to my position. My hard stop loss is under, like I said, under yesterday's low, but really my discretionary stop loss is more like below today's low. If it really wants to keep this momentum going, it shouldn't even dip below 4,400. That means it would have to dip below three big layers of support: the 10-day moving average, the 50-day moving average, and the 5-day moving average, which is kind of flattish to a positive slope now. It was a very bullish day, enough to buy some shares, half of a position, but not good enough for me to be so aggressive. Big resistance up here around 4,500. You have the 20-day moving average and the 200-day moving average, and these two pivot points. So adding around this area would not be a good idea. I would wait until it trades above that level and above the 100-day moving average. We'll see if it happens in the next couple of sessions. But for now, I am long the S&P 500. And now for the NASDAQ 100. This has been proven to be very strong support, just under 13,900. And today, it just finished. It tried to push above the 10-day moving average, the 50-day moving average. Couldn't really get there above that. So the trading range that I'm looking at for as a setup is this level, just under 13,900, and just above the 10-day moving average and the 50-day moving average. So this level here, 14,300. If it pushes above this level, I will consider going long. But I'm already have market exposure, so I would either add to the S&P 500 or to this one here. Conclusion, I'll be watching this one very closely for a push above 14,300. Now the semiconductor index. This one, for the record, I am long via the SOX ETF. This proved to be very strong support. And the reason why I bought it today, I'm playing it as an oversold bounce, or just call it a bounce. Very far away from all these moving averages, the 20 and the 50. So I think it has enough room for a nice bounce. And I liked today's price action. It was able to push above the 5-day moving average and above the 10-day moving average. My stop loss is under today's low. So really, it would have to dip below all these pivot points the 10-day moving average and the 5-day moving average before I get stopped out. If that's the case, then that's a very weak signal and I'll just take my loss. And for the Dow Jones Industrial Average, it is still trapped between these pivot points, 34,000 and 35,000. Here, between here and here, you have all these moving averages, and today it really tried to push above that level, close to around the 100-day moving average. Right above that, you have this pivot point and the 200-day moving average. If it pushes above this level, I will consider going long. However, I already have some good market exposure, so I can either add to my current positions, play the NASDAQ 100 or the Dow Jones Industrial Average. We'll see, but this one looks like it wants to go higher. This is a very nice setup. I like it. As you can even say that this is kind of a cup and handle pattern. I don't really follow patterns, I just noticed it. Not really. Whatever. Pivot points are pivot points. And now for the Russell 2000. This one still in this range. 202.5 and this level down here around 190, 196. It closed around the 50-day moving average. If this one is able to push above the 20-day moving average, I think it can really get going. So this range between here and here has been very choppy. So until it breaks out of that range, I would expect the same type of choppiness. Thanks for stopping by and good luck trading tomorrow.